How often should I check my investments? If you are wondering, oh, am I checking my investments too many times or not enough times? How often should I be doing this? Today's video is for you. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. Don't let the fear of missing out or the stress of constantly checking your investments hinder your financial success. Let's discover the perfect balance of the amount of times we should be checking our investments. And in today's video, I am discussing long-term investors. So I'm not discussing day traders, those that are buying and selling investments constantly. This is more for those that are doing long-term investing and want to build their wealth over time. If we are checking our investments too frequently, then we are going to have that constant stress of, oh, should I be selling my investments right now or should I be buying more right now? And it makes us prone to market fluctuations and our emotions, which means that we are probably going to sell when the investment is low and buy when it is high instead of the opposite. So we definitely don't want to be checking our investments too often because it is going to cause this stress on us. And as a general guideline for long-term investors, it's recommended to check your investments quarterly or semi-annually. That way you can assess the performance that you have seen so far, and you can rebalance your portfolio if you need to, depending on your own long-term financial goals. And I know that some investors prefer a more hands-off approach. They kind of just want to set it and forget it. And that is kind of where I am. I have an index fund that I like to invest in, and I know that I can always invest in that index fund. I can always put money in there and not have to worry about checking on if it's still a good performer or not. And if you would like to know which index fund that is, I have another video. I will leave a link above. You can check it out later on. But investing in this index fund makes it very passive for me to invest in the stock market. Honestly, I have an auto transfer set up from my checking account every single month that actually goes to my investment account and purchases this index fund. So I'm not worried about keeping my eye on my index fund. But then I also have a few different individual stocks, and these I do like to keep my eye on. But I'm definitely not watching them every day because that would definitely stress me out, and I don't need that. So I will check on them probably every quarter and just make sure that the company is still a good company, that the leadership is still good, that they are performing the way I would like them to perform. And the reason I don't have a lot of individual stocks, I have maybe about 10 individual stocks, is because I do want to keep my eye on them. And if I had 50 or 100 or hundreds of individual stocks, then I would have to keep my eye on all of those. And I would have to check my investments a lot more often. And I don't really want to do that. I want to be more passive with my investing. And that way I do not have to check my investments all of the time. So if you are investing in an index fund that is a good index fund, then you probably don't have to really check your investments. Maybe you could even check it once a year. You can be very passive with your investing. But if you do have a few individual stocks or a lot of individual stocks, then you would want to check those at least quarterly, I would say. And you can also keep your ears open and just listen to what's happening in the world. Is the news talking about these companies that you are investing in? Are there major changes happening to these companies? Are they still the leader in the industry? And if you hear a lot of talk about these companies, then maybe you do want to check your investments a little bit more often. But for me, I like to keep this as passive as possible. I would rather spend my time with my little niece and nephew, or traveling, or growing my business, creating these YouTube videos. Just make sure that you aren't checking your investments too often, that you are tempted to sell your investments if you see them drop. We want to take that long-term perspective and invest in things that are going to grow over time. We want to be invested in good companies or good index funds, so we don't have to worry about constantly checking our investments. Because the more that we check them, then the more nervous we can become, and we can also maybe even stop investing. I like to do dollar cost averaging. That's why I have the auto transfer set up to my investment account, so that if the price is really high at one point, I don't actually see that price because it's just an automatic transfer. So I'm not tempted to think, oh, I should wait until that price comes down. And then if it doesn't come down and it continues to rise, then I never actually got in at the good price, even though I thought it was high at the time. And then the opposite could be true if the price is dropping and I'm thinking, oh, maybe I should get out of this investment. Maybe it's not a good investment anymore. And then I sell my investment and then I lock in those losses and the investment ends up going up later on, then I've missed out on those gains. So the better companies or investments that we can make up front, and then the less that we can check on our investments, the better off we are going to be, because we are investing for the long term. And we've chosen great investments, so we know they will continue to rise over the long term. So it doesn't really matter what they are doing in the short term. And if you are thinking, oh, I would really like to be better at investing in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that link and check out the free masterclass. And just a few tips to help you know when to check your investments. Just set up your investing strategy. That's the first tip that I want to give you. Decide what your strategy is and then follow that going forward. That's going to lead to having less temptation to buy or sell when you really shouldn't be. Just know your strategy and then follow it. And then the second tip I want to give you is to stay informed, but don't do excessive monitoring. A lot of times I will hear about one of my friends that purchased a certain company, and so they're constantly checking it and they're watching it fluctuate over time. It'll go up and then down, up and then down, and they're thinking, oh, should I keep it? Should I sell it right now? What should I do? But that excessive monitoring is really playing with your emotions and causing a lot of stress on you. So make sure that you stay informed with your investments, but don't continually check the investment. And then the third tip I want to share with you is to stick to your long-term plan. Don't get sidetracked along the way. I know that I have done this sometimes with my investing. I thought, oh, I can make a quick win with this certain company. So I put some money in there and they didn't immediately go up, right? I wasn't sticking with my long-term plan, which I know works, to invest in the index fund that I like and then just a few companies that are good, stable companies. You're going to be a lot less stressed and be able to sleep easier at night if you stick to your long-term plan. Comment below and let me know how often you are checking your investments. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear about this information. And hit the subscribe button to subscribe to my YouTube channel and to the little bell to get notified on when I post new videos. And if you want to see even more videos from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.